Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Monday, 19th day of September 2016, and we are looking at the Dow Jones Industrial Average after trading up over 100, I believe 130 points higher throughout the day. Did close slightly in negative territory, but red nonetheless, 18,120. That was the close effectively. Standard & Poor's up 0.5%, fractionally higher, in essence unchanged, 2133. And then NASDAQ closing off about 0.5% on the day at 4794. And lastly, want to take a look at the US dollar, off about 0.25% at 95.85. So traders, as you know, we will see the FOMC meet this week, 21st of September, and we will see whether or not they plan to implement a interest rate hike. Consensus, and this includes my observations and beliefs, is that there's no possible way we will see them raise interest rates this month. However, there is one given, and that is that in terms of what will happen, there is uncertainty in the market right now. Even though the consensus or belief is that interest rates will not be raised, there's no way to tell categorically, absolutely, that that will or will not occur. That's uncertainty, and uncertainty, of course, is what will move certain markets in chaos and other markets to the upside, such as the precious metals. Take a look at the Dow Jones Industrial Average. It traded up about 130 points during the day, but absolutely closed below where it opened today. And because of the fact that we are looking at the FOMC meeting getting off this week, my sense is that we'll see extreme choppy trading. We could see this market increase sizably in volatility, but it should be fairly choppy. Now, this is a weekly chart of the Standard & Poor's. As you can see that we did have a tremendous down week 2 weeks ago. Last week we had a higher close on the week, and today we've got in essence an unchanged market. Now, this is of course a weekly chart, so the week is going to be a day since it's only Monday, but won't make that much difference when we convert it to our daily chart. What you'll see is a lot of what we saw in the Dow Jones Industrial Average, and that is some real genuine choppiness in the marketplace itself. And due to that choppiness, I expect it to trade in a defined and fairly narrow range throughout the week, at least up until we hear some sort of statements out of the Fed. Now, traders, interestingly enough, if the consensus is that rates will remain steady and unchanged or, historically low, that should put some pressure on the dollar. Now, we are looking at a daily chart. You can see the tremendous upside surge that we saw on Friday. But here's what I find kind of interesting. If we take a look at these series, the bottoms of these bodies, some of these lows here, we can see that we've absolutely seen over, call it the last couple of weeks, the dollar moving in an upward trajectory. Now, we can also look at these highs here and kind of move them across to this high here, and we do see a compression of range between these highs and these lows, and it is quickly approaching an apex as well as been trading closer to a midpoint. If we get an announcement of interest rates being stable with no change, I would expect to see the dollar move down. Traders that are involved in the dollar, this might be a time to position yourselves into a trade. Lastly, I do want to take a look at crude oil. Crude oil up about 0.5%, which, as you know, is not a huge move in crude oil. Up 21 cents a barrel at 43.24. Interestingly enough, over the last couple of weeks, at least as we mark September off, which begins here, September, we saw the market hit a tentative bottom at 43 in crude oil, and then over the next week we saw it move back up to almost 48, and then last week we saw it fall back down right to this price area of 43, where it sits right now at 43.24. Now, if we go back in time to look at some sort of historical data that will give us some insight, we do have this particular price point that occurred in really May of this year, in which we had $43 become a stable point and a jumping point to higher prices. However, in this particular case, I wouldn't be surprised to see it break below and look to challenge either 41 or $38 per barrel. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.